Please, if you can hear me, can you give me a thumbs up? Please, if you can hear me, just give me a reaction so I can know. Oh my goodness. I had my mic muted, so I didn't know my mic was muted and I've been talking. All right, so just a recap of what I've just said. I said a lot. Our three objective is networking, uh, training and refresher program, then uh, the big engagement, the engagement, and the networking is going on fine. We have a WhatsApp platform that we uh, used to network, and there have been many things that we have done behind the scenes, even off the group. A lot of things we have networked with one another very well, and it's not ending. It's getting better every day. The second one is what we are doing now, the training and refresher program, which we we call resource person from within ourselves and from external sources to come tell us about things that we need to know beyond our specialty. And last week we had uh, resource person come from Leadway Pension PFA to tell us about pension and how we can incorporate pension into our personal financial planning. And it was a robust session. So I'd like to call on somebody uh, to just give us a refresher about what we had last week, which is pension and personal financial planning. And by the way, the session was recorded and was uploaded to our YouTube channel. If you want the full session, you can go there. But right now, we'd like to just have a refresher because our time is fast spent. By in 10 minutes time, we call on our resource person who's with us and ready. So if you like to give us a refresher within 2 minutes, just go ahead and unmute and speak to us. Okay, I can see Mr. Samuel. Samuel, if you'd like to give us a refresher, you can unmute your mic. You can hear me.
Okay, sir. Good evening, sir.
Good
Good
evening.
evening, everyone.
Good evening.
So, a quick recap of what we did last week was we talked about pension basically. So, and our resource person really explained how everything works for us. So, when we talk about pension, we are talking about a certain portion of like income or let's say salary kept by an individual for future purposes or use. So basically, the pension scheme or pension matter has to do with keeping a certain, portion of your income you are getting now. That is, now that you are still young, now that you can still do things. That now that you are still strong, so basically you are keeping some portion of the money, or you are investing it, or the other way around. So, engaging in this kind of act means we are was actually saving for the future. So our resource person did justice to that. And we also mentioned the fact that the commission that regulates this pension act, the PENCOM, that is, they are the one that give regulations, they are the one that actually make us know how we can invest our funds and how we can generate maximum return from them through the PFA, which is the Pension Fund Administrator. And also, we are meant to understand that now that we are still young, now that we can still do things, which is very, very important that we save for the future because a time will definitely come whereby we are not going to be working for the rest of our lives. So we need to just make some certain decision now that will actually pay off at the end of the day. So the resource person also introduced us to the leadway pension where we can invest our funds into different stock and into different platform whereby at the end of the day we are going to get return as much as possible. Also, we talked about the RSA, that is the retirement savings account, where we can actually deposit our money, whereby if there's any issue we have, maybe in the place of work, whereby we are not giving our entitlement after after several works or several years of work, so we can actually lodge complaint to them. So I think lastly we talked about the how we can withdraw our money from the pension schemes, or let me say the retirement savings scheme. So there are some certain ground whereby we can actually remove let's say our funds or our investments from the pension scheme, whereby it is not actually yet time to actually recover those money. So those ground are what we call when there's a loss of job. Maybe we didn't expect that we are going to lose our job at a certain point in time. So for that reason, we can actually fall back to our investment scheme. We also talk about health issue when there's early retirement, yes, and when there's mandatory retirement, that is maybe we are already of age, then we are mandated by law to actually retire. So those are the ground whereby we can actually say, oh, we want to take our investment out of pension even before the time elapsed. So that's basically what we discussed about. Thank you.
All right, thank you, Mr. Samuel, for that recap. Thank you. And if you missed that session, the video is up on the Pusin YouTube channel for you to listen to the full video and get a full package. Thank you again, Mr. Samuel, for always giving us a recap. So today, before our resource person comes in, I'd just like to, just I always do, just like to draw attention to some goings on, whether financial or not. For the past 3 weeks or so, 2 weeks now, we've had security issues in Nigeria, and it's rather heart aching. It's heart aching, and personally, I sympathize with the victims, and especially their loved ones, because you can imagine the state of their mind right now, their psychology. And a lot of people have been speaking up, and I commend them. If you've been following this session, I've always been saying that as professional accountant, we should speak up. We should always speak up. Speaking up is not an option. We should always speak up. But I just realized that some of us don't speak up. And a few of us that speak up, we speak it wrongly. And I think it's even better not to speak up than to speak up the wrong way. But speaking up is very important, and speaking up the right way is not negotiable as professionals, because we are professionals, and there's a way professionals are expected to do things. No matter how painful, no matter how serious the thing is, that professionalism should be there. So why am I saying this? Some students, and it's even as I'm saying it, it's aching to even say it. Some students who just woke up early in the morning just to go to school, do their routine, and just return home to learn, were kidnapped, and their teachers, 44 of them. And as I speak now, they are still in captivity at the mercy of the men of the underworld. And there's no worse treatment than that. And many people have been speaking up, and some of our colleagues also have been speaking up. Our professionals have been speaking up, which is very good. But what I want to draw our attention to is, as professionals, I understand the situation can be there, because if you I've been around for a while. In fact, as even when in 2006 or 2005, 2006, when the Senate president said, I don't know, I think it was Senator Adolphus Wabara, or I can't remember the Senate president who said that there's no third term. That's when I started following Nigerian politics very closely as a young guy. I think I was 19 years old or 18 years old then when I was I following politics during Obasanjo and Atiku, Ribadu, Papa Balogun, Inspector General of Police. Then I was really following the story. So I know that towards electionary period like this, such things always happen where politicians just pop up some things politically to just to checkmate one another. And in the end, it's always the victims are always the populace, the innocent citizens. So, and if you notice, even in the administration of President Goodluck Jonathan, it happened. Even it has been the trend, and it's so bad and unfortunate that innocent people will always suffer for political test game or political uh, uh, fireworks. That is, even with the reforms, the tax reform and all the reforms we have right now in the country. Personally, I think that the reason, for instance, now I I cook myself. I prepare my meal myself. So so I get to interact with all this retail stuff. So I took my cylinder to go fill, because I used to fill and fill it a lot. And the last time I feel, I think I bought a kilogram for 1,300 naira. By the time I feel just this last month, last Wednesday or so, I was told it's 2,000 naira. So what? Within a month or so, 700 naira has been added to the cost of gas, cooking gas. And this is Lagos. I don't know what occurs in other states. So, and these are results or the impact of the reforms and impact of the re-engineering. And my question has always been that in the reforms are on point. The national single window, the e-invoicing, the tax reform, they are on point and are very necessary. But the impacts are felt by those who those reforms seek to protect. So if they see the reforms seek to protect the poor, so if the poor are so much hit by the impact of the reform that they may not even live if the thing becomes so severe so much, would they even live to even enjoy the benefit of the reform? So that's my own concern about the reform, that there should be a way of balancing whereby while we are enduring the pain, we should also be adding some reliefs alongside. Not that we're just enduring and we don't even know what the future holds. Whether the reforms, of course, the way the reforms are going, we're seeing the result, but the admission there's an admission here now. We don't know who will win the next election. What if another admission comes and everything turns again and we face another direction, which is possible? So that's why Nigerians have trust issues with the government, because you don't know what will come up tomorrow. So why am I saying all these things? That as our professionals, we should, when we are reacting to issues like this, let us speak professionally. Because I've seen some accountants, the way they speak, to me, the way I see it, they use the opportunity. Some of us, we are still dealing with anger issues and some bad behavior. Use the opportunity to express the bad behavior they have not really dealt with, and start uttering or typing some vulgar words. No, we shouldn't do that. We should not use the opportunity that their security situation and its pattern. In fact, I'm not trying to downplay the situation. I know what it is to be incarcerated. In fact, I had a life experience. When I was going to be every day, I was arrested by this Kai indisciplined Lagos official, where those guys, they wouldn't even let you, they won't show you the way. They will just wait for you to try to call, go to VI every day, I tough it can be. You are trying to beat time and try to get to your office in good time, and these guys are always there to to arrest. So they picked me up and put me inside their vehicle. That this was like 8 years ago. And I was there for 3 hours. I couldn't go out. I was like, I couldn't buy anything. I couldn't urinate. I was just kept there. Just for 3 hours. The experience was terrible. How much more those have been held for 2 weeks? Under very wicked. I mean, where I was held, I mean, I could see people, I know they won't do anything bad to me. But these are people that are held, they don't even know whether they will survive the next day. So it's that terrible. But that doesn't mean that institutional accountant should be vulgar and be, calling people unprintable names. We can talk, criticize, and criticize rightly. And one of the important or the imports of good criticism is Mr. Taiwo Oyedele. I knew him when he was criticizing the government, the tax policy, and he was criticizing well. And he criticized to the point that he got into a position of power because he chose his word, and he was always, if you check his LinkedIn and all his social media accounts, he's always criticizing. Then he was always criticizing the Nigerian tax system until he got the opportunity. So that's how to criticize as professional accountants. And lastly, before we call it, I already taken 5 minutes of our resource person. So lastly, we for the past 4 weeks now, we've been bringing a resource person and been talking about financial management. I want to implore us. This is it's more than just a Google Meet session. These are really life impacting sessions. The one we had with UBA Capital, the pension, very, very important, very, very important for financial planning. Some of us, we are in active, especially many of us here, we are doing 9 to 5. And even though we are talking about being professionally independent by running your own business, which is still on course. But for now, we're doing 9 to 5. It's an opportunity to have, 9 to 5 gives you regular income that you expect. There's a date to it. It's so stable. You can put a date to it. Such money are very important. So, and it gives you opportunity to save and invest. Please, if you miss that session, please go back to the YouTube channel and watch the one we had with UBA Capital, the team from UBA Capital. Very, very important. And the one with pension, very important for financial planning, for us as professional accountants, for the SMEs that we service. As 9 to 5 person, you also get pension. Pension is not just mere contribution. Pension is one of the things that you can bank on. I'm a pension desk person. Even last week, somebody came to me, wrote to me that he needed to access his money. I just asked him because they always tell me they are obliged, not that they are obliged to tell me. They tell me because I was in the beginning of their contribution, because we have had many projects and they work with us. So I'm always the one ensuring their contribution are related to the PFAs. So they tell me their balance. Somebody called me and said, I have 12 million. So I have 8 million, I have 12 million, I have 14 million. They'll just open up to me. And the money, and they have collected they collected their 25%. And they still have 8 million. How was balance able to get to 8 million? Because after taking out their 25%, they left the remaining balance by force, because the PFA wouldn't allow you after taking 25%. It is until you are 50, you can have access to that fund. Imagine. And many of them were in their late 30s those years. Now they are becoming 50, they are clocking 50, many of them are clocking 50, and they are going back to their account and withdrawing millions. And just not, some of them, for instance, the one that I spoke to him last week is going on with 2.5 million. And with program withdrawal of 60,000 naira, and he's still a young man, and we see our project, we still give him that, we still work actively and we still get pension. So you can imagine him as a person, 60,000 naira on a monthly basis, and he has 2.5 million naira to work with, or maybe I don't know what he wants to use this for, and he's still active, he's still agile, he can still work. So you can imagine that for some things, at least the 60,000 naira, whether it works or not, you already have 60,000 naira. I think that one can some you know that regular income is something that comes regularly. You can't underestimate that the importance of what you are sure to come, what is sure to come. So let us take our pension seriously. Let us take it very, very seriously, and let us monitor it. Your pension is not just contribution. Monitor the growth, the interest on it, and ensure that your employers are remitting as and when due. So that is what I have to say, and ensure that we handle our finances appropriately. And one thing I always say, the last thing I will say is that we all have what we need. All of us have what we need. That's the truth. The only reason why we are not saying it because we are pressured. We are looking at validation from others. The moment if you're able to conquer the quest for validation from other people and shift your attention to things you already have, you will discover that everything you need to be anything you want to be, you already have it. The only distraction is that you are looking at other people and trying to get validation from or trying to be like them. That's the problem. If you're able to solve that problem, you will see differently. All right. So I'd like to call on our resource person, and our resource person, like we all know, is Mr. He's been with us since the beginning of the session, and is been in the WhatsApp group, giving us contributions which have also always been posting. So our resource person is Mr. Adegbola Johnson Wasiu. He's a member of the associate member of the Institute of Chartered Accountants of Nigeria and associate member of the Tax Institute. He's also financial accounting with Grid Prox, and also lecturer at Wise Associates Limited. Some of us, we know Wise. I remember in 2004, when I was trying to do my ATS, or 2003, I can't remember, 2003 or 2004, that's when I knew Wise. So to have a lecturer from Wise come be our resource person is a big deal. So everybody join me, make welcome Mr. Wasiu, Mr. Adegbola Johnson Wasiu, to do justice to company income tax compliance from January 2026 and going forward. Mr. Adegbola, please, you have the floor.
Good evening, everyone. Thank you so much, my admin. Thank you, everybody. Thank you so much. It's so good to be here. Please, can you confirm you can hear me, everyone? Please, can
you are clear. You are loud and clear.
Okay, thank you so much. Thank you. Okay, since the number is actually sizable, I would like to mention, thank you, Deborah. I can see you. Abdurazak, thank you so much. It's so good to have you here. Samuel Shoyoye, you're welcome. Thank you for coming. Glory of God, you're welcome. Mubrak City, David, thank you, you're welcome. Thank you for coming. Thank you for coming to our meet. Permit me to mention the remaining. Okay, Ola Ogumefon, thank you for coming. Oyelaki Oyikosola, that's so beautiful of you. Thank you. Precious. Thank you, everybody. Thank you. It's so good to have every one of you here. I'm so happy to be here today, and it's an honor. Thank you, Deborah. Thank you for coming. Mokala Nero, thank you. Thank you, everybody. I'm very happy to be here once again. And thank you for the wonderful, wonderful network. Thank you, administrator. Thank you. Thank you for planning this very well. Thank you. And thank you again for growing the, what will I say? What will I call it? For growing this, is it an administration, I will call it, or for growing these members It's so good. Thank you so much, everybody. So, actually, let me tell you something, everybody. I don't know what the admin has called me here to come and do. I just know that I'm only here to see you guys, talk to you, mention your names, and we can actually call it a day. So, guys, can you permit me to actually go? Can I hear from Samuel Shoyoye? Deborah, can you please say something? Please, I think we are already done.
Good
Do you
evening,
permit
sir.
me to leave now? Yeah, what do you say, Samuel?
I heard you calling my name. So I have to talk.
Yeah, so what do you think? I think we are already done with the session, right?
Yes, sir.
Okay. Admin, is admin still here? I think
Okay.
we are already done with the session, sir.
I don't think so.
Okay,
I don't
thank
think
you
so.
so much. Thank you so much. Okay, guys, I really want to walk you through company income tax compliance in Nigeria. What has changed? Why did we change it? And what is now the new thing we are actually adopting? That is why we are here today. I say company income tax compliance in Nigeria. What happened before? What is the fault we actually seeing? What has happened before? And what is the new thing we are actually adopting? So, admin, please, will I be the one to share my screen, or you share it from your end?
Yes, you please go ahead and share it from your hand.
Okay, thank you. So I will be sharing you my screen now so you can see what we actually have for today. Okay. Please, can you confirm you can see my screen, everybody?
It's very clear. Very clear.
Okay, thank you, everyone. Good. I say company income tax compliance in Nigeria, 2026 and beyond, under the Nigeria Tax Act 2025. Now, can you see what we have, everybody? We have now broken this into 4 different acts. We have the Nigeria Tax Act. We have the NTAA 2025. You're going to see everything as we move on. We have the NROX Act 2025, and we have the JRB Act. I know you'll be wondering, what is NTAA? What is NRSA? What is JRBA 2025? All these things, we have actually taken away some acts. Now we have only broken everything down into 4 different parts. That is what we call the NTA Act, the NTA 2025, NTAA, NTSA, and JRBA. So work with me, everybody, as we go into this. Why the new reform? Why the new reform? Now, I want to show you the background. Why the 2025 tax reform? What is the need for the tax reform? And that is what I want to actually show you now. This is basically everything you are seeing here is the reason for the tax reform. Now, look at the very first thing you see there, everybody. Can you see that 10.5, 10.8%, everybody? That is the percentage, the total tax Nigeria has generated, divided by the gross domestic product. Of course, I know if I tell you that what makes our gross domestic product, okay, that is all what? All money, all amount of money that is coming from either taxation, oil and gas, the economy itself. This is what makes up our GDP, gross domestic product. Our gross domestic product. Now, out of all the total amount of money government is actually generating now, look at the amount of money that is coming from tax. Amount coming from tax is only 10.8%. That is our gross, our Nigerian tax divided by the gross domestic product. You know, for instance, let me assume that somebody here is collecting 100,000 naira salary. Can anybody tell me, can anybody please unmute and tell me what will be the 10% of that 100,000 naira? Assuming I am collecting 100,000 naira as salary today, and I am having 10%, let me say 10% is my tax. What do you think that 10% equals to in naira? Anybody? Can I hear from Abdul Rashid or Samuel? What does that mean? If I say 10% of 100,000, what does that mean?
In that would be calculating it, that would be 10,000 naira. That is the tax liability be 10,000 naira.
Okay, that means if my salary is 100,000 naira and 10% of it is my tax, that means the tax I will be paying will be 10,000 naira. That is very correct. But imagine, now look at what is actually going on in our country today. All amount of money that government is actually seeing, the only one that comes from tax is just 10%. And you know what is happening? Government is collecting 30% on profits from companies, medium, large, small. You remember what we were using there? Mediums, small company, medium company, and large company. Now, let us now go to what is happening in the world. We want to compare what is happening in the world with what is happening in Nigeria. Now, in Nigeria itself, can you see this thing I'm pointing to everybody? Can you see this 10.8? In Nigeria itself, Nigerian tax divided by the GDP will give us 10.8%. Now, let us now compare this with what is happening outside the country. Look at the average of what the other countries are generating. On average, other countries are actually generating 34%. That is, the global average tax divided by the GDP. US today, United Kingdom today. Okay, so what they are seeing is 34%. That is the percentage of their global average tax to their what? To their gross domestic product. They are generating 34%. Now look at what Nigeria is generating. That is telling us that there is problem somewhere. There are loopholes, there are weaknesses. So why can't we also meet up with 34%? You know, assuming we are actually around 20%, 25%, 28%, what will you say? We are still okay, right? Yes or no, everybody? We are what? We are still okay. But look at what we are generating. We are generating 10.8. That is telling us that there are weaknesses somewhere. There are loopholes somewhere. And that thing should be what? Should be adjusted and rectified. Okay, let me quickly bring your attention to something. In Nigeria today, do you know what our gross domestic products, our Nigeria tax to gross domestic products in 2021? Okay, let me quickly tell you. In 2021, our gross domestic product to our GDP was actually 10.99%. That is according to what's it called? OECD, Organization for Economic Cooperation and Development. That was our ratio of Nigerian tax to our GDP in 2021. In 2022, we had 7.9%. In 2023, we had 8.2%. Now, look at what we have recently, everybody. We have 10.8%. That is telling us that there is problem somewhere. Why can't we meet up to 34% on the average scale? Because other countries are having 34%. 34% of all their money is coming from what? From tax. 34% of their GDP is coming from what? From tax. Okay, look at the next one, everybody. Can you see 4 laws here? 4 laws. Now, everything now has been broken down into 4 laws. We are not having many laws again. No, we are not having different acts again. So you will see all the laws now by the time I open that to you. Okay, and this tax reform, when will it start, everybody? It will begin from what? January 2026. Are we together, everybody? Okay. Do we have any chartered accountant here, or an accountant, or anybody who actually studied accounting, or somebody writing ICANN currently? Do we have any one of them here? Please, can you please signify? Just signify. Okay, I think I can see. Yes, Samuel, thank you. Please unmute. Ola, thank you. Okay, Samuel. Which act actually governs personal income tax? Which act governs? What do you say? Yeah, before this new tax reform.
So the personal income tax is governed by.
Remember the act that is
the
governing.
personal income tax. Can you hear me?
Yes, I can hear you very well.
Can you hear me?
Yes, I can hear you very well.
Okay, sir.
Okay.
Said,
do you remember the act governing personal income tax? Yes. You may not tell me. You not put it here. Just tell me. Just tell me the act.
Okay. The P tax, that is the Personal Income Tax Act.
God bless you. Thank you. That is very correct. You know, we have Personal Income Tax Act. Thank you. We have Personal Income Tax Act. Okay, I think Ola, please, can you also unmute? Ola, please, can you unmute? Is Ola there? Okay, good. Ola, what is the act or law governing company income tax?
CIT.
Thank you. That we call it, that is SITA, right?
Yes.
That is SITA. Good. You also remember that we have VAT too. There's also acts governing what? Governing VAT. Am I communicating, everybody? If you also remember that we have another one. There's this one called what? Capital Gains Tax Act, Petroleum Profit Tax Act, Stamp Duties Act, Debt Fund Act, ITF Act, Nazeni Act, FIRS Establishment Act, Joint Tax Board Act. All these things, guys, the laws are actually too much. The laws are too much. The laws are too much. PITA is there, SITA is there, Value Added Tax Act is there, Stamp Duty Act is there. Nazani, how do we comprehend all these things? So now we have now broken everything into 4, which means that there is nothing like SITA anymore. I hope you guys are following me. There is nothing like SITA anymore. There is nothing like Value Added Tax Act anymore. There is nothing like Stamp Duties Act anymore. There is nothing like FIRS Establishment Act anymore. All those acts, they are no longer existing. Now we have 4 different laws. We have 4 different laws, and I'm going to walk you through them one by one. And when will the new Tax Act begin, everybody? It will begin from, in fact, of course, it has started, everybody, from January 2026. Okay, everybody, what is now the problem? What is the problem with the old system? What is the problem with the old system? Okay, look at number 1, everybody. Can you see what I stated here? I said fragmented tax laws spread across multiple acts. Fragmented tax laws spread across and that is what I have explained to you. We have PITA, SITA, VAT Act, Capital Gains Tax Act. All those laws are too much. I know when laws become too much, it can even become complicated to even the tax advisors, even the tax practitioners, to even business people, because the laws are becoming too much. Look at the next one. Because we have complex and overlapping levies. Actually, this one is even very funny. You'll be hearing some people will come to you and say, oh, you are going to pay for TED Fund. You are going to pay for Naseni. What is TED Fund? That is tertiary education. What? Do you all agree with me, everybody? The tertiary education fund, right? That is your third fund. You have to pay for that one. You have to pay for Nazeni. All those things are becoming too much. And what is Nazeni? That is for science and that is science and engineering levy. Science and engineering levy. All those things are already becoming complex. So because of all these issues we are having, we have to what? Take away all these things and bring in a what? A new tax law. Look at the next one that we have. Low tax to GDP ratio. Of course, is that not enough reason? There are so many loopholes in our tax laws that people are actually leveraging on, which is about tax avoidance. There are so many words, so many gaps and loopholes. Look at us making 10.8 despite the amount of money some people are paying for tax. If I ask somebody here now that, okay, how much are you paying for that? Person will tell me, okay, they are removing 100,000 naira from my salary. And why is that money not reflecting in the total amount of money? That is because when you are paying, some people are not paying. Some people are what? Are not paying. While you are making sure that you are paying, while they are removing that money from your own salary. For others, they are not removing the money from their salary because they are hiding under the laws. So as a result of this, we bring about the new tax law to actually amend and correct all these things. Look at the next one. Narrow tax base. Narrow tax base. Narrow. The tax base is so narrow. The tax base is so narrow. The parts from people they are collecting the money from, they are minimal. Assuming the way they are collecting money from us is the way they are collecting money from others, then tell me why the Nigerian tax to GDP will not be what? Will not actually increase. And look at the next one. Inconsistent administration and lengthy disputes. The administration is inconsistent. The administration is inconsistent. And why do I say this? Every time you'll be seeing different words, different rules, different laws. They can come today and say, okay, you're not going to pay, what you're going to pay again today is 40%, is 30%. So it is not consistent. And when this thing becomes inconsistent, it will affect the taxpayer. In fact, one of our principles of tax is that there must be simplicity. So when these things are becoming inconsistent, having a lot of disputes, then there is a problem with that with those acts. So they should be taken out. And again, we have multiple taxation. Of course, multiple taxation at the federal level, at the state level, at the local level. Federal government will collect their own. State will collect their own. Even local government will collect their own levy. So all these things they are just taxing the same income. They are taxing the same profits. There is need to actually provide solution to all this. And that is why we have to take out the old system and bring in a new system. So what do we want to achieve in this new system, everybody? That is the goal of the reform. And if you see the goal of the reform there, can you see what I wrote there, everybody? The goal of the reform, the goals of the reform. So what do we want to achieve? Let me quickly show you what we want to achieve first. Number one is to simplify the legislative framework into 4 consolidating acts. That is what I'm going to show you next in my next slide. 4 consolidating acts. Nothing like CETA anymore, nothing like PITA anymore, nothing like VAT Act anymore, nothing like Capital Gains Tax Act anymore. We have been able to simplify everything and put it into 4 consolidating acts. Number 2, we want to expand the tax base without significant rate hikes. We are trying to expand the what? Expand the tax base. That is, we want to make sure that people that should pay tax are actually paying. People that are supposed to pay tax are actually what? Paying. Enough of collecting money from these people, not collecting money from other people. That is why we have brought about that is what brings about the new tax act, the new tax reform. And the next one says relieve MSMEs, that is what, you know, the medium-sized companies, everybody, and stimulate what? Business growth. We want to digitalize tax administration. You want to digitalize tax administration, digitize it, such as electronic filing, electronic invoicing, and so on and so forth. And we are trying to align with global standards. We are trying to align with global standards. You know, I actually mentioned this thing. What is this thing I actually mentioned? BEPS pillar. Please, are you guys following me? Can you confirm you can hear me, anybody? Can anyone please confirm they can hear me? Can I see your thumbs? Okay, thank you, everybody. What is BEPS? What is BEPS? Is anyone willing to actually answer me? Can anybody tell me what is BEPS? Okay, thank you, Samuel. Yes, Samuel, please unmute and tell me.
All right, and that's base erosion and profit shifting.
Wow, that is wonderful of you. Thank you so much. So that is what we call base erosion and profit sharing. Yes, that is very correct. Please, my thumbs, I want to give you a thumb. Yes, thank you so much. Thank you. That is coming from me. Thank you so much. I want to give you 2 million. 2 million of my thumbs, not money, actually. Okay, so yes, thank you so much. Thank you so much. Thank you so much, Samuel. That's wonderful. Yes, BEPS simply means what, everybody? Base erosion. Okay, that is, we want to align with global standards, where we have our base erosion and profit sharing pillar 2 divided by what? To be 15% of what? Of METR. METR. I want to come back to that one too. People will now be asking me, this guy will also asking, what is METR again? Can anybody also help me here? What is METR? I don't want everything to be coming from me alone. What is METR? Anyone? Can anybody tell me what is METR? Okay. Anybody? METR. Is anybody raising their hands? Okay, I think I've seen somebody. Yes, that is okay. Let me hear from Mubrak City. Yes, thank you. What is METR?
I think that should stand for Nigeria tax rate.
Okay, thank you. But METR simply means marginal effective tax rate. Marginal effective tax rate. That is the meaning of METR. Marginal, you see, yes, marginal effective tax rate. Thank you. Thank you, Olainka. Thank you, Mubrak City. You are right. Okay, and what's our next goal again? Our next goal is to reduce multiple taxation and compliance burden, so that everybody who are supposed to pay tax, we actually what? We actually pay their tax, and there's money in the what? In government purse. You know, when there's money in government purse, we will not have the need to borrow. Okay, I want to believe that you guys know the amount of money we have borrowed this year and last year. Okay, so guys, let us move to the next slide so you can see what we want to achieve today. Okay, good. Yes, you know, I actually showed you this thing the other time. I actually showed you this. Yes, these are the 4 laws. The 4 laws comprising the 2025 tax reform package. You know, I was telling you about something called NTA. Yes, NTAA, NRSA, and JRBA. Let us now look at them one after the other. Okay. The Nigeria Tax Act 2025. What does it cover? Okay. The principal substantive tax law consolidates CIT, that is company income tax, CGT, Of course, you know CGT. PIT. When I say CGT, that is capital gains tax. PIT, that is personal income tax. VAT, that is value added tax. And sector-specific taxes introduces company classification. Okay, where we have small company, medium company, large company. Now we have the new incentives such as economic development incentive replacing pioneer. We have the CFC rules, revised FTZ provisions, and BEPS Pillar 2 minimum effective tax rate of 15%. So now, look at what this Nigerian Tax Act is actually saying. It is saying this act now is now replacing Company Income Tax Act, Personal Income Tax Act, Capital Gain Tax Act, Value Added Tax Act, and others. Even the petroleum too. Okay, everybody. So there is nothing like all this company income tax you are seeing again. What we now have is what? Nigerian Tax Act 2025. So going forward, nothing like all those things you have been hearing before. We now have Nigeria Tax Act. Okay, everybody. So, oh, sorry. Oh, I'm very sorry. I didn't mention my name before the start of the lecture. Sorry, Olayinka. My name is Adegbola Johnson. My name is Adegbola Johnson. Thank you so much. Okay, everybody. Like I said before, we now, with this Nigeria Tax Act NTA, has consolidated all those CIT, CGT, PIT, VAT, and other things we actually have. Okay. Now look at the next one, number 2. Let us take Nigeria Tax Administration Act, NTAA. What do we have under NTAA? What does it replace? Let me make you go to the bottom. Can you see what I wrote there at the bottom, everybody? I said, NTAA replaces Federal Inland Revenue Service Establishment Act. Before now, we actually have Federal Inland Revenue Service Establishment Act. We also have Finance Act provisions on administration. So this NTA now has what? Has replaced all this Federal Inland Revenue Service Establishment Act. So what do we have under the Nigerian Tax Administration Act 2025? It governs how taxes are administered, mandates digital first approach, electronic filing, electronic invoicing, annual information statements, integration with what? With Form 20AS and bank data, revised penalty regime, objection and what? And appeal timelines, and power. After this, everybody, immediately after this, these 4 laws, I'm going to ask about 4 questions, and I want everybody to actually contribute before I proceed. Objection and appeal timelines and powers of authorized tax officials. So basically now, everything we have under the Federal Inland Service Revenue, Federal Inland Revenue Service Establishment Act before are now under what? Nigeria Tax Administration Act. Nothing like Federal Inland Revenue Service anymore. Okay, the one you call FIRS, FIRS Establishment Act, nothing like that anymore. Okay, look at the 3rd one, everybody. That is Nigeria Revenue Service. Of course, if I say Nigeria Revenue Service, you know that, you know what I mean. NRS, Nigeria Revenue Service. You know that there's nothing like Federal Inland Revenue Service anymore. Nothing like FIRS anymore. What we now have is what? Nigeria Revenue Service. So what do we have under the, Nigeria Revenue Service? Look at what we have, everybody. This, it establishes the Nigeria Revenue Service as the successor to FIRS with expanded mandates. Clarifies jurisdiction between federal and state revenue authorities. So what it does is that it clarifies the jurisdiction between federal and state revenue authorities, introduces interagency data sharing obligation, and streamlines taxpayer registration via unified SIM system. Oh, that is where my first question is coming from. But then they have given you the expo. Okay. Regardless of that, I'm still going to ask, and I know you will surely provide me the answer. Okay, can you say that word, everybody? Streamlines taxpayer registration via a unified SIM system. Correct. Okay, the fourth one, everybody. Joint Revenue Board Act. What does this act replaces? It replaces Joint Tax Board Act. Can you remember before now, we usually have what is called Joint Tax Board. Now, nothing like Joint Tax Board Act anymore. What we have now is what? Joint Revenue Board Act. So people will be wondering, why are they just changing the name? Why can't you just leave it the way it is? Okay, the Joint Revenue Board Act, everybody, creates a new coordinating body across all tiers of government to prevent multiple or double taxation. That is what this rule are actually established for. They want to prevent multiple and double taxation. It establishes the Tax Dispute Resolution Tribunal for faster resolution of tax controversies. Okay, the target is that within 180 days, they have resolved your tax issue. Harmonizes levies collected at state and local government levels. So that is the purpose why all these 4 laws have been raised. Okay. So now up to this stage, can I have anybody? Okay, I want to entertain just 2 questions before I actually proceed. Okay, please, can 2 people actually ask me a question before, based on all these 4 things we have, or what we have said, before I actually ask you guys my own question? Okay. Yes. Do we have any question from anyone in the house? Let me hear from you. Okay, please, can you signify by raising up your hand? Okay, I'm actually waiting for you guys. Okay, I think the first person will be Ola Ogumefon. Okay, Ola Ogumefon. Ola Ogumefon, yes. Please, let me have your question. You are welcome.
Yeah, thank you for a wonderful presentation. We are going along with you. But based on what you mentioned in respect of the problem of the old system, I think even though that's what we are moving to a new system of Rev 360, NRC still has to do more, especially in relation to the public awareness and also educational system, so that, because apart from the one they have done, I think should be early May or something like that. Nothing has also, I think should be maybe quarterly or something like that. Something like that should come here, so that public awareness, because this is a new system. Secondly, the information technology also, that Rev 360, there's some teething problem, which I believe things need to be looked into, so that at the end of the day, the users will be happy, and this information technology also will be friendly to use appropriately. Thank you.
Okay, thank you so much, Ola Ogumefon. Thank you. Okay, can I entertain one question again before answering the 2 of them together? Okay, since you guys have no question, okay, let me answer your question, Ola Ogumefon. Thank you so much. Okay, the thing I'm going to say here is that you know that anytime a new system comes into place, don't forget that it will not be 100% perfect at the interim or immediately. If you are starting something for the first time, I will not lie to you, it will not be perfect immediately. You know that some of the issues the taxpayers are actually having. We will now build on those issues, then use those issues to provide what? To provide relevant solution. So by the time we bring it up, if there is no issue, everybody are just doing wonderfully well on it. I will not lie to you. That system may not last long because people will surely find what? Loopholes. But by the time we are using it for the first time, we are looking at the issues we are actually having, and from that issues we are providing what? We are providing solution. Because you will agree with me with this. If I actually bring up a new system, look at, I think I'm having about 20 people here, or 21 now, and I give everybody here, okay, this is what I've developed. Can you look into it? Don't forget that in that thing I have developed, even though I am a professional, somebody who least understand what I have done will surely have one issue or the other. And from that issues, what do? I will actually see senses in it and what? And provide what? Relevant solution to what I have developed before. That is telling me that, okay, fine, this thing I still have to do more. So in that Ref 360 you're actually talking about, fine, of course, everybody will surely have one thing or the other to say, because it's a new thing that people are actually bringing to us. So there is need for us to actually, well, that is why you will notice that government did not actually penalize anybody for not paying, what's it called, for not registering or paying their their personal income tax, for not paying their VAT as at when due, because they know that they are just getting used to the new system. But I assure you, before the end of this year, everything will surely come into proper shape. Don't forget, that was how we started with the first one. Okay, so thank you so much, Ola Ogumefu. Okay, let me ask this few questions before we actually go ahead. Okay, the very first one is this, everybody. What is the very first thing government actually did? What is the very first thing government did in unifying the tax system and promoting or growing the tax base? Immediately we introduced the new tax reform. Government did a few things and even asked the taxpayer to also do. So can I actually hear what are those things? Can you name them specifically, or can you mention them? What are those things government actually did, or government told the taxpayers to actually do immediately the tax reform was introduced, or even before the introduction of the new tax reform? In everything we actually did from the tax, from the 4 laws, I think we mentioned something like that there. Okay. Can I actually hear from anybody? Okay. Somebody wants to say something. Okay, please can you raise up your hand if you want to say something? Nobody wants to answer my question. I am having. Okay. Oh, you like you, thank you.
Good evening, sir. What the government did, I think, to me, they eradicate some of the old tax laws to avoid mostly.
What did you say? Sorry, I didn't hear that.
So I said they sorry. I
Okay.
said they eradicate the old tax, some of the tax to avoid double taxation, and also
Okay, good.
The VAT from increasing to 10%, they made it like not changing, like they still maintain it at 7.5%
Good.
from VAT.
Okay, good. Okay, what of on the part of the taxpayer? What did they do? What did they tell the taxpayers to actually do? On the part of the taxpayers.
To get their tax identification number, like
They
past
made it
year.
compulsory that everybody actually have their what? Their tax identification number and what? And link it to the what?
And link it
And link it to their
to
bank what? Their
bank
bank
account.
accounts. Do you remember that,
Yes.
everybody? They made sure that what? Everybody actually have their what? Their team and the what? And they link their what? Their team to their what, everybody? To their bank accounts. Okay. So that means government actually know what is happening with you. Government know the amount of money you have in your bank accounts. Okay. So they can tax you what? They can tax you accordingly. Thank you. Link team to what? To the bank account. That is very correct. Okay. And they also tell what? You know, people were saying that this VAT will increase from 7% to 7.5 to 10%. What did they actually do? They bring it back. That come, no. We cannot just increase everything like that. The purpose of the tax reform is not to what? Is not to increase or to bring about tax hike. It is to regulate everything. Okay, thank you so much, everybody. That is a wonderful question. Without response, rather, without wasting much of your time, I want us to actually move to the next point because of our time also. Okay, guys, look at what we have. I hope you can all see my screen. Please, can you confirm you are still following me? Okay, thank you, Samuel. Now, effective from January 2026, we don't have, there's nothing like small company, medium company, and large company anymore. What we now have is small company and other companies. I hope you all hear me, everybody. I said what? Small company and what? And other companies. Okay. But for the sake of this class, I had to break it down into what? Into three, because you are used to them. Okay. We now have small companies and what? And other companies. And immediately I'm done here again, we also have another question. Okay. So let us see, everybody. Who do we call a small company? A small company is a company who is having annual turnover that is less than or equals to 100 million. Do let me be shouting all this million, so people will not be thinking maybe I'm having millions of money in my room. So I will be silent whenever I'm calling that million. Okay, permit me, everybody. Annual turnover less than or equals to 100 million. Oh, you like it? Do you hear me? Oh, you like it? Can you hear me?
I can hear you, sir.
Okay, you can hear the 100 million I call, right?
Yes, sir.
But can you also shout that 100 million too?
100 million.
Okay, everybody. Yes, thank you so much. For a small company is a company who is having annual turnover that is less than or equals to 100 million. Okay, so that means that your revenue in a year, your total sales in a year should be less than or equals to 100 million. That is where you can be called a small what? A small company. And number two is that your non-current asset, which is what we call your fixed assets, your fixed assets must be less than 250 million. Provided these two things are met, you can be called a small company. This is where the problem is, everybody. They said both criteria must be what? Must be satisfied simultaneously. That is, they must be met. They must be met. They must be met. That means that if your company is having a turnover of 120 million, that means you are not a small company anymore. If your company is having a revenue of 101 million, 102 million, 200 million, 300 million, you are not a what? You are not a small company anymore. Also, these two things must be met before you can be called a what? A small company. So good. Now look at this thing, everybody. Look at the tax treatments. Look at the tax treatment. That means a company who is a small company will not pay company income tax. You are exempted fully. Hello, everybody. I hope you are getting me. A company who is a small company will not what? Will not pay company income tax. You are fully exempted. Second one is that you will not pay any capital gains tax. You will not pay capital. What's capital gains tax? That is the profit you make from selling your assets. The profit you make from selling your what? Your assets is called capital gain. Okay, the profit I make from selling an asset is called what? Capital gain. That means you will know what? For instance, if a company sells its what? Its motor vehicle now, it will know what? It will not pay tax because it is a what? It is a small company. The company is having a turnover less than what? 100 million. And the company is having a fixed asset of what? 250 million. Okay, good. Development levy, 0%. You will not pay that much. You will not pay development levy. You are exempted from routine tax audits. You will not pay no minimum tax obligation, nothing like minimum tax for you. You will not pay anything tax. Okay? Estimated to cover what? 90% of Nigerian businesses. Okay, everybody. Now, this is where my first question lies. Okay, let me call. I want somebody to actually attend to this for me. Ganiyu Wahab, are you there? Please, can you please unmute if you are here? Ganiyu Wahab. Okay, I don't know if this person is online with us, if he is currently here. Okay, let us just move on, everybody. Okay, a company who is actually having a turnover of 90 million. That's my question, everybody. A company who is having a turnover of 90 million. And the fixed assets of this company is 280 million. Under which category does the person fall into? Can anybody please answer that one first? Okay, Mukaila Neron, thank you. Okay, thank you, Mukaila Neron. Please.
Thank you, sir. Good evening.
Good evening. Thank you so much.
It's too much company because it has not fulfilled all the requirements. The requirement is that the turnover must be less than 100 million, while the fixed assets must not more than 250 million. So it has not fulfilled all the requirements. Therefore, it's not more a small company. It will definitely pay tax.
Okay.
Thank you.
Okay, thank you, Mukaila. Okay, I want to hear from Samuel Kalu. Samuel Kalu, please. Can I have a response to? Samuel, please, can you unmute? You guys are wonderful.
Can you hear me?
You are welcome, Samuel.
Good evening. Good evening. Can you hear me?
You are welcome. You are welcome, Mr. Kalu.
Okay, yes. Just like the earliest person said, it's no longer a small company as long as the asset is more than 250. So it's obliged to pay tax.
That is, will it be on the small company or on the on the large company now?
Large company.
Thank you so much. Thank you so much. Please, can we give thumbs up for Samuel Kalu and Mukaila? Samuel Kalu and Mukaila, please. Oh, I like that. Can we blow it for them? Yes, blow it for them. Blow it for them. Thank you so much. You guys are wonderful. It's very correct, everybody. That means a company that is having a turnover which is 90 million, but its fixed asset is 218. That means the company will be taxed. The moment you are having a fixed asset that is higher than 250, even though your revenue is what? Is less than 100, you will surely be what? Be taxed. That is because you are no longer a what? A small company. Okay? For you to be a small company, you must have what? Less than or equals to 100 million as revenue, and you must be having fixed assets less than what? 250. That is all for you to be a small company. Now, anything from a small company, then you have become a what? A big company. Yes, as that person said, a big or large company. That is between, you are now medium and large. Okay? And for you to be a large company, look at what we have done for you, everybody. So I actually look at the way I actually split it for you, medium and large. Okay? But there's nothing like medium and large anymore. What we now have is what? Is other companies or large companies. You get it, everybody? Now, if your turnover is greater than 100 million, you have become a what? A large company. If your annual turnover is what? Between, although I don't want you to actually follow this, but I'll just, everything there is just actually, I don't want you to mix it up. They are all one, whether you are a large, a medium, or a large. Nothing like medium and large anymore. They have become what? They have become just one. If your revenue is above 100 million, you have become a what? A large company. Okay? Now, you are going to be what? You will be taxed. Now, look at the first one. Look at the first treatment. Your CIT, you are going to pay company income tax rates. That is 30% on your profits, on your accessible profits. 30% on accessible profit. You're going to see the breakdown of what is called accessible profits in my next slide. You're also going to pay what? Capital gains tax, which is 30% on chargeable gain. Okay, everybody, what is our capital gains tax? What capital gains rate before? Capital gains rate before? Anybody? What is the rate for capital gain before? Yes, Samuel.
10%. 10%.
Yes, before we were using 10%. Now, what is the tax rate, everybody, for capital gains tax? That is 30%. Thank you so much, everybody. You guys are so wonderful. You guys are wonderful. Yes, you're also going to pay development levy, which is 4%. You will be subjected to standard filing and audit requirements. Okay, minimum effective tax provision will also what? Apply. Okay, everybody. So that is what we actually have for that. But I don't want anything to actually confuse you here. So that is why I try to bring everything into what? Into large company. Okay, let us go ahead, everybody. Look at our computation here. Look at our computation. Okay, look at what we have here. The very first thing will be your what? Your revenue. Your revenue will be by your what? By your audited financial statements. That means before you do your filing, then your revenue must have been what? Audited. You know that you have to pay your tax between the what? Between the first 6 months after your what? After your year end, right? Okay. Your profit must be what? You have to remit your what? Your tax. Okay. Within what? Within the first 6 months after your what? After the year end. Okay, everybody. Now look at what we have here, everybody. Your gross revenue or turnover will be as per your what? As per your audited financial statements. Don't forget, what do you mean by the word audited financial statement? That means that it is the responsibility of the management to prepare what? Financial statements. And that financial statement must be audited by what? By another external party, who will give credence to what you have what you have recorded in your financial statement. Okay. Now you are going to less your what? Your cost of sales. Cost of sales are your expenses, right? Those must be allowable deductions. That is the expenses that are allowable. For instance, depreciation is not what? Is not allowable. It is called disallowable deductions. Now you have your gross profit, you less your what? You less your allowable administrative expenses. What are examples of allowable admin expenses? Those are your what? Salaries and wages. Okay, everybody, your interest on loan. right, everybody? Your general expenses, miscellaneous expenses, okay? All those things, as far as they are allowable, your interest on loan, okay? They are all allowable. Then you less your capital allowance. What do you mean by the word capital allowance? When a company actually have non-current assets, e.g., building, motor vehicle, plant and machinery, furniture and fittings, office equipment, you know, we have to charge what? We have to charge capital allowance on them. So capital allowance is used here instead of what? Depreciation. It is in financial reporting, we normally use what? Depreciation. In tax, we make use of what? Capital allowance. Okay? The purpose of capital allowance is to reduce the amount of what? Amount of money that will be what? That will be taxable. To reduce the amount of money that will be what, everybody? That will be taxable. Okay. So, for building, we have initial and annual allowance on building. And if you can remember, the initial allowance on building is what? Is 15%. Right? And the annual allowance on building is what? Is 10%. Do you all agree with that? Have you all heard of capital allowance before? Okay. For your motor vehicle, the initial for motor vehicle is what? Is 50%. The annual is what? Is 25%. That is for motor vehicle. Motor vehicle, plant and machinery are having the same thing. Office equipment, they are having the same thing. Plant and machinery too is having 50-25. That is 50% for annual, for initial, 25 for what? Annual. Office equipment too is having what? 50% for initial, 25% for what? For annual. Okay. But for furniture and fittings, the initial allowance for furniture and fittings is 25%. Annual allowance is what? Is 20%. That is how you are going to arrive at your what? At your capital allowance, both the initial and the annual. Okay, everybody. Now look at the next one. We now say what? Add back. You know, these are your disallowable what? Your disallowed expenses. Any expense that is not what? That is not allowable. So you have to what? You have to add them back, even though you have what? Deducted them. Okay? That is your penalties, your fines, political donation, donation to Cherubim and Seraphim Church, donation to Redeem, donation to CAC. Okay? As far as all these donations are not in the what? In the published places you can actually donate to. Yes. Okay? These are the things, these are the complexities of what? Of company income tax. You don't just donate to anyhow. You don't just donate anyhow. There are certain parties or institutes you can what? You can donate to. Okay. Oh, really? I don't know. My time is already going. Sorry. Is admin. Hello, is admin there?
Yeah, I'm with you.
Okay, please, can you help us do something about our time? I can see that. I think this thing is supposed to end by 6:30, right?
No, you can continue.
Can I still go ahead?
Please go ahead.
I'm so sorry, everyone. I'm going to be very fast now. Sorry. I don't know that my time is already up. Okay. We also have, yes, we now have our accessible or taxable profits. Okay. So whether you are a medium or you are a large company, anything apart from a small company is called what? A large company. You're going to pay tax at what? At the rate of 30%. While 0 for a what? A small company. Okay. You also pay development levy 4%. Okay. But for a small company, it should be what? It should be 0. Oh, Ola, yes. Can you see my screen? I'm sharing my slide. Oh, you mean I should share it, right?
Yes, yes.
Of course, it will be shared after the lecture. Yes, the admin will share it. Yes, the admin will share it. Okay, then we less our what? Our withholding tax. Withholding tax. Okay, we less our withholding tax. Then we have our what? Our net company income tax payable. Okay, which is due in what? In 6 months financial end. You have to pay it within what? You have to what? You have to file, do your filing, okay, 6 months, and you have to pay your what? You have to pay your tax 6 months after the what? After the financial year end. Okay. For instance, now, if my accounting year end is 31st December every year, if my accounting year end is 31st December, that means that I have to do my filing and pay my tax within the what? Within the first 6 months. That is between January to what? January to June of the following year. I hope you guys are getting me, everybody. Between January to what? To June of the following year. Now, okay, that is, I have to do my what? I have to do my filing. Okay, let us move to the next slide because of our time. Okay. Now look at, very good. Look at the changes. Look at the key tax rate now and levies. The key tax rate and what? And levies. Okay. Regarding the new tax act here, our company income tax rate is not changing. It is still what? It is still 30%. Can you see? We have the rate before 2026. We have the rate from what? The rate from 2026. Can you see that, everybody? We have the rate before 2026. We have the what? We have the rate from 2026. Okay. Company income tax, 30% and 30%. No change in what? In the rates. But small company will not pay what? Will not pay CIT. The next one is company gains tax, capital gains tax. From 10%, it has become what? It has become 30%. There is a significant increase. Okay. The next one is what we call good for an individual. For an individual, capital gains tax for individual. Before it's 10%, but now it has become what? 0. That means if Samuel Kalu is having a car and Samuel Kalu wishes to sell his what? His car. That means that Samuel Kalu will not pay what? Will not pay capital gains tax because he is an individual. Because Samuel Kalu is an what? Is an individual. Okay. If Olayinka David wants to sell his his furniture and fittings today, Samuel Kalu will not pay what? Will not pay capital gains what? Tax. Because Samuel Kalu is an individual. But if Ola Ogumefun Company Limited, Ola Ogumefun Company, Ola Ogumefun Company wants to pay, sell his building today, Ola Ogumefun Company will pay what? Will pay capital gains tax, provided he is a what? Is a large company. I hope you guys are actually following me. Okay, that's from between individual and what? And company. Now look at development levy. Look at all these state fund, ITF, industrial training fund, NASENI, all those things. We have taken them out. We took them out. We're now bringing what is called development levy, which is just what? 4%. Nothing like debt fund again. Nothing like ITF again. Nothing like NASENI again. What we now have is what? Is development levy, 4%. Again, there is nothing like minimum tax anymore. It has now been replaced by what? By METR, medium effective tax rate for what? For MNEs, NRC minimum for what? Minimum tax rules, okay? Now, the BEPS pillar for large MNEs. Before, we don't have it. Now, it has now become what? 50%, but that will be for top-up tax if global effective tax rate falls below what? Falls below 50%. This is a new obligation. Now look at what we have. Withholding tax on dividend for residents still remain as 10%. Withholding tax on dividend for non-residents still remain as what? As 10%. Not changing. Now look at our transfer pricing too. Our transfer pricing threshold, nothing actually changed from that one too. Okay, you are still seeing what? 300 million international. Not what? Not changed. Okay. Sorry, please, you permit me to be, yes, let me move very fast a bit. Okay. CFC rules and non-resident company taxation. What do I call CFC, everybody? CFC simply means controlled foreign company. Controlled foreign company rules. Controlled foreign company rules. Okay, I will just read them through for you. Trigger. Nigerian resident company owes higher or equals to 40% in a foreign company. What is taxed? Undistributed profit of the what? Of the controlled foreign company and tax in Nigeria annually, even if not what? Remitted. That means that if you look at what I wrote from the trigger now, look at the trigger I actually wrote there. I said, a Nigerian resident company who owes higher than or equals to 40% in a foreign company, okay? You are going to tax the what? The undistributed profits of the controlled foreign company and tax in Nigeria every year, even though it is not what? Remitted. Who are those exempted? CFC engage in genuine trade with active income, which is not passive or not an investment income. They may qualify for the what? For the relief, okay? What do you document? That is your documentation now. Audited financial statements of the foreign subsidiary required, okay? And what do you avoid? Nigerian Revenue Service may what? May look through structures designed to avoid the what? The 40% threshold using what? Using nominee arrangements, okay? I just put this one there in case we just want to actually read further, okay? So let me quickly move ahead because of our time. I didn't know my time is already fast spent. Please, can you please read this part for you? These free trade zones. Please, you will get the material. We can actually read this through free trade zones. Okay, please permit me. I wasn't looking at the time. Yes, very good. This is the part I want to actually get to now. Excellent. Tax administration and e-filing. Tax administration and what? And e-filing. Now, please, this part, I need your attention very well, everybody. Let us look at it together. Okay. Filing deadlines and forms. Filing deadlines and what? And forms. So look at what we have there. Your capital, your company income tax return must be filed 6 months after your financial year end. It must be filed 6 months after your what? Your financial year end. Yes. Please, can we look at that very well, everybody? It must be filed 6 months after the financial year end. Okay. Let me also move to what matters. Your payee monthly must be made before the 10th day of the following month. Can you see that, everybody? Your stamp duty, 30 days, you must pay 30 days of transaction. Okay. And look at the next one again, your TP, your transfer pricing form. Okay. So let me just, I want to focus on those two that actually concern you for now. So do you see it, everybody? You must do your company income tax filing 6 months after the what? Between 6 months after the financial year end. Your payee to from on the 1st to 10th of the what? Of the following month. Okay. And you know the way we do your VAT, Abi? VAT is from what? Between the what? The first 21 days. I hope you can all recollect, everybody. All those ones still what? They still stands. Now look at the penalties and interest regime. If you fail to do so, of course, you will be fined. If you fail to do so, you will be what? You will be fined and what? And penalized. Late CIT return filing, 100,000 naira for the first month, and 50,000 naira in the what? In the month after. Okay. Late payment of taxes. Late payment of taxes. 10% penalty of on outstanding. Okay. If you are late to do your filing, you're going to pay 10% penalty on what? On what is outstanding. Now, late payee, also 10%. If you fail to deduct withholding tax, you're also going to pay 10% of undeducted amounts. Yes, you will pay it. Late stamping of documents. You can see all those fine there, everyone. You can see all those fine there. If you also obstruct NRS officer, if you obstruct NRS officer to do their duty, you will pay 2 million naira fine plus possible prosecution. So these are your tax administration. You must do it as an accountant, as a tax consultant, as a tax practitioner. Okay. Your company income tax 6 months after your financial year end. Your payee between the first 10 days of the following months. Your VAT between the what? Between the first 21 days. And your what? And your withholding tax too. Okay, look at the digital compliance, everybody. Digital compliance, mandatory. Electronic filing via NRS portal. I know some of you are already doing that now. There is no paper filing anymore. Nothing like tax promas too. Okay, we now have what? Ref what? Ref what do we have now, everybody? Can anybody remember? Anyone? Ref what do we have now?
Ref 360.
Thank you, Ibrahim. Thank you. We have e-filing for what? For VAT registered businesses. We have annual information statement, AIS. Okay, you can see everything there. Now, objection, appeal, and what? And dispute. Okay, so those are the things we actually have there. Please make sure you go through all these things. Now, transfer pricing. I will not say you don't. I will not say, oh, well, yes, some of you actually, we need this. In fact, you need this. But in the interim, please, you're going to let us read through this thing, okay? That is for transfer pricing. The document will be made available to you so we can actually look into all these things and know what we actually want to do. Yes, 2026 year-end compliance checklist for CIT filing. 2026 year-end compliance checklist for CIT filing. Okay, the very first thing, pre-year-end now, okay? Determine your company classification. Is your company a small company? Between October to December, just look at, okay, is my company a small company or a large company? That will be based on your turnover, okay? Review all related party transactions. Ensure that all your transactions are done at what? At arm's length. Okay? Ensure arm's length pricing is what? Is documented. Okay, everybody? Yes, and so on and so forth. Look at the phase 2. After year end. Finalize audited financial statement. That is before your work, before your CIT competition. Make sure that you now have what? You now have audited financial statements. Compute your what? Compute your CIT. Compute your development levy. Okay? And so on and so forth. Now, filing period. Up to 6 months after financial year end. Okay? You do your filing. All these things are what we have said since. Okay? You do your filing and you make sure that you are what? You pay your what? You pay your tax. Now, opportunities and risks for taxpayers under the new tax reform. What are the opportunities for taxpayers in this what? In these new tax reforms? Okay. Number one, tax relief. 90% of Nigerian businesses now what? They are now CIT exempt. Do you know why, everybody? You will not believe this, but it is the truth. Yes. 90% of Nigerian businesses now, they are now what? They are now CIT exempt. That means 90% of Nigerian businesses are actually what? Are actually small companies. You will not believe that, but that is the truth. Ibrahim, how Ibrahim, do you believe this? That 90% of Nigerian businesses are now CIT exempt. Does anyone believe in this? You have to believe with me. Yes, it is actually the truth. Statistics shows that 90% of Nigerian businesses are actually small companies, because 90% of companies we have in Nigeria today, they are having revenue less than 100 million in a year. And even their what? Their fixed asset is less than what? It's less than 250 what? 250 million. Okay? So that means that they want them to go and reinvest their what? Their capital, so they can become what? A large company. Number two, simplified levies. We now make sure that there is nothing like tertiary education fund again, all those things. They have been simplified to what? To just development levy of how many percent? 4%. Okay, so I think that is okay for now. You can see others there too. Now, what about the risk and challenges? If you look at the what's it called? If you look at the capital gains tax now, look at the shock. Rate of CGT jumps from 10% to what? To 30% for companies. Restructuring, mergers, and properly disposal significantly are now more what? More expensive, because 30% will now be charged on the what? On the profit made for capital gains tax. Okay. And I think and some other things are actually listed below. Okay, let me move to the next one. The next slide. Sector by sector impact analysis. Look at a startup or a small company, small medium-sized company. They are now full CIT exemption up to what? 100 million turnover. They want them to reinvest the money they make, so they can have increase in what? In capital. Banking and finance. The CIT does not change from 30%, right? Look at technology and fintech. This applies to what? To tech infrastructure. Look at multinational companies, oil and gas, manufacturing, real estate. You know, real estate are the ones selling properties now. Okay, that's why they increase it from what? From 10 to 30. Look at agriculture. Okay, all those things are actually there. Please look at all these things and see how it actually impacts your what? Your own sector. Okay, guys. Now, what are the key takeaways in this discussion, everybody? Number one, the key takeaways and my conclusion for you here is this, everybody. Determine whether your company is a small company or other companies. This single decision determines your entire tax profile for what? For 2026. Number two, digitize now. The NTA 2025 mandates electronic filing and what? Electronic invoicing. Companies not on NRS digital platforms will face penalties and what? And audit risk. You have to go and register with what? Go and register on Ref what? On Ref 360, okay? Number three, review your structures. These are actually relevant to those that are actually in this sector, the multinational companies, the oil and gas, and so on and so forth. You have to reconcile your accounts early. Okay? your financial statements, your AIS mismatches with your bank data, your withholding tax credits, your VAT turnover, reconcile all these things and make sure that you do your what? Your remittance as at when due. Number 5, document all your financial processes, transfer pricing, CFC, EDI claims, and what? WHT. All require contemporaneous documentation. Post-assessment creation is what? Is rejected. Okay? Any post-assessment creation will be what? Will be rejected. Now, look at this thing, everyone. We now say here that the 2025 tax reforms shift Nigeria from taxing more people to taxing smarter. What this reform is now doing is what? Is not taxing people anymore now. It is only taxing what? Taxing smarter. For small business, it is what? It is a relief. For large company, it is what? Tightening the rules and what? And bringing more reporting process. Compliance will now be equal to what? Accuracy plus what? Early reconciliation plus understanding your what? Your classification. Everybody in this session today, thank you for listening to me. And I want to believe that you have been able to gain one thing or the other. Actually, this class is supposed to end by 6:30, but I think I took it to 7, and I don't want to exceed that 7 o'clock. That's why I want to end my discussion with you now. So I will not be taking too much of your time. Thank you so much, everybody. I'm very happy to be here today. Samuel Kalu, thank you. Olayinka, thank you. Samuel, thank you. Ola Ogumefu, thank you. Awao Ibrahim, thank you. Other wonderful members of this class, thank you so much. I'm very happy to see you all. Adegbola Razak, thank you. It's good to be here. Oyela Kirin Kosala, thank you so much. Samuel Shoyoye, thank you. Yes, thank you so much, everybody. Thank you so much. God bless you. Thank you.
All right, thank you, Mr. Adegbola Johnson Wasiu. Thank you. Just as he said, the time is fast, and so on that note, we call it a day. I wish you happy new month in advance.
Thank you, sir.